I think that we're about to see one more crash. It won't be the end game, but it'll be one more crash that takes the stock market to new lows by April, is my forecast. Between now and April.
You say that the stock market is eventually going to realize the economic condition that we're in, but why haven't they realized it yet? Why haven't equities investors, what you're saying about the economy, it's not really news. We know that the economy is in terrible condition. We know that monetary stimulus has been the primary driver of equities prices. Why haven't people realized that yet? We're still seeing the Dow at 30,000 points.
I am surprised, David, because how long does an economy have to limp? With this level of stimulus in the past, you would have had super growth and inflation, both. And we have neither. It shows how dead the economy is. I think that we're about to see one more crash. It won't be the end game, but it'll be one more crash that takes the stock market to new lows by April, is my forecast. Between now and April, another 40% crash, greater than the S&P down 34, 35, greater than the 20% crash for that. Ever since 2018 top, which was the first bubbly top, we've seen every crash take us to new lows, but every stimulus rebound take us to new highs. I think we're going to see the high soon, and we're never going to see this high for years. And that the next crash is where investors lose confidence in the Fed and governments endlessly stimulating a dead economy. And then investors withdraw. You got to realize, here's an important fact, David. Globally, 255 trillion in debt, way more than 3 times GDP, way more than ever, but financial assets, because of QE, is twice that, over 500 trillion now. Just that financial asset bubble crashing will take 200 trillion or more out of the global economy, 3 times GDP, and that is enough to cause a depression without anything else.
Harry, are you short right now then?
Yeah, well, no, I'm getting ready to get short. I'm looking at early December as the next. I think the markets are going higher here. I think they got one more rally in them at a minimum. I think that I'm looking at a target of about 3,750 to 3,800 on the S&P, maybe 32,000 in the Dow, and then I think this thing may be over. And again, you have to ask yourself, are you going to go for that last 5% when the next crash, within a matter of months, could be more than the last flash crash?
I mean, we're looking at possible triggers for this crash. We've been seeing nothing but good news out of the economy for the last couple of weeks. Vaccine, stimulus, data points to recovery, maybe not to the same extent as pre-COVID levels. I just don't see a trigger here. Help me out.
Yeah, I think it's going to be continued disappointing data. Now, I just said Moderna just said something this morning. The head medical director in the stock market totally ignored it. He said, wait a minute, folks, you don't understand. This vaccine is proven to reduce the severity, to make, if you do get this, it's going to be it may be a nothing burger or less severe. That's what it's proven to do. It is not proven to stop transmission yet. We hope it does, but it's not. What if you get more announcements like that? I mean, the stock market ignored this morning. Yeah. The stock market quickly ignores bad news and jumps on any good news. The vaccine, up 6-7%. Moderna says this today, totally ignores it and goes up in it.
Yeah, haven't we seen that bad news is good news? When we have bad news in the economy, that just encourages the Federal Reserve to stimulate more, right?
Yeah.
Would that be a factor you're considering?
Yeah, but you got to look at the ECB and the Fed lately. They're saying, okay, folks, we have more than done our duty here. Fed just printed $3.4 trillion since the repo crisis. Repo crisis was the first warning sign to me. The banks cannot survive without constant QE. The feds keep saying, we just needed to get over this 2008 crisis and we'll be okay. 10 years later, they pull back the stimulus just a little bit, 2017, 18, and then the banks go illiquid and need funding from the Fed to keep alive. That shows the banking system's weak. Every time you pull back stimulus, the economy slows. It shows the demographics is weak. We're weak. It's just a matter of I think this is my real theory, David. This COVID thing hit early this year, February, March. I give that a 9 to 12 month lag before you really feel those small businesses and zombie companies. They don't go down overnight. Stocks can go down overnight like they did, but bankruptcies and Chapter 7s and 11s take time. That's what I think. I think by the first quarter, you're going to see more companies going under, and that's going to be the trigger. For no apparent good reason.
For no apparent good reason. What about monetary, MMT, modern monetary theory? Are you a subscriber to that theory that the Federal Reserve can continuously pump money without repercussions of inflation?
No, that would say that everybody's missed all of history, everybody's wrong, and you really can get something for nothing. This is exactly, David, what they say at the top of every bubble. In the 29, that Irving Fisher, the leading economist in the country, said, we've reached a permanent plateau of prosperity. We've gone to heaven. We can just die here. This is what happens. You cannot create growth by just constantly printing money as if work ethic, technology innovation, and all these things don't matter. Hey, we've seen our technology innovation from the internet cycle. It has peaked and is declining. We've seen the incredible spending and productivity of the largest generation in history. It's declining. We're only living on short-term free money, and it has diminishing returns. That's important. Diminishing returns, just like if somebody's addicted to anything, let's say crack, heroin, you take it, coffee. It takes more and more and more to get the same high or to keep from coming down until you die from stimulus. You die or hit the pavement and go to rehab. So what I'm saying, this downturn would be the best thing that happens. For 2 to 3 years, we go through a big, let's call it a detox, deleveraging of debt and financial asset bubbles. When you have all these people putting money in bad debt and bubbles, you're misinvesting for the future, and you're killing productivity, which we've done nothing but seen declining productivity. And money velocity, David, tells you how productive you're investing. That's been declining since 1998, like it did from 1918 to 1932, which ended in a Great Depression.
So suppose the stock market does crash in April. Would you be buying at the bottom there? Would this be the greatest buying opportunity in your life?
I'd be looking for a bounce. I would say, if we see another new low in the stock market, I would predict we are not going to see new highs on the Dow, S&P, NASDAQ, biotech. You pick anything but maybe kind of somewhere down the line, Bitcoin. You're not going to see new highs on anything for decades, because you didn't see new highs after 1929 for 24 years in 1953. When you get this big a reset from this big a bubble, that's what happens.